Joining us now is Angelo Zeno, Senior Equity Analyst, CFRA Research. Angelo, I'm always glad when we have you on to talk about your coverage. So we're taking a look at Broadcom. There are many who argue that it should be a member of the Mag 7. I probably won't hear argument from you on that. You've got a buy rating on it. It's got a $290 price target from you all. So tell me what gets it there.
Yeah, so thanks for having me, Diane, and definitely no argument from me in terms of potentially adding it to the Mag 7. But, when we think about Broadcom and its upward trajectory here, it really comes down to, we think, two factors or two parts of their business. One, it is their AI-related revenue. We have now seen an inflection where now their AI semi-revenue has surpassed that of their non-AI revenue and it growing much more rapidly. When you kind of look at the guidance here and the visibility that they have on the AI semi side of things, it's incredible. Hock Tan recently pointed out to the fact that he expects 60% growth rates to be sustained in terms of their AI revenue through the end of next year and even potentially accelerate at some point next year. And a big reason for that is because of some of the new businesses that they are winning, new customers that they are gaining here that will start to ramp, not necessarily this year, but in 2026 and even into 2027. The other big part, the other thing you got to keep an eye on is their software business, something that probably doesn't get enough attention and somewhat sleepy in nature, but nonetheless, it's a monster free cash flow generator. It will continue to do so. And they continue to shift at least their old VMware clients from a licensing to a subscription-based business, which typically have 3-year long contracts. And that also provides very good visibility for this company. And we think will continue to support, we think, a higher revenue trajectory as you continue to see a higher percentage of their revenue really tied to those two parts of their business.
That 60% or plus 60% growth rate, how sustainable is that? What's the driver there?
Yeah, so it's a good question. So in terms of total revenue growth, we think 20% top line growth will be sustained at least through the end of next year. And again, that'll be driven by the AI semi revenue. And that 60% growth rate, we think at least sustained through the end of next year. And the real driver is new customers signing up for their custom silicon business. They've really got two AI businesses. One is custom silicon. The other is their networking business. The networking business continues to grow very well. And, they've got some new products that are ramping here over the next couple of quarters, which will sustain some of those growth rates that we're seeing there. But it is really, the key is going to be the custom silicon business. They've got customers existing like a Meta, like an Alphabet, which will continue to buy more and more chips as an existing client. But more importantly, companies like an xAI from Elon Musk, you've got Apple, you've also got Oracle, and you've got OpenAI and Stargate, which we think will ramp here over the next, let's call it 6 to 8 quarters. And that's really going to be the driver, we think, in terms of sustaining that 60% plus growth rate and even potentially exceed expectations on that front.
And then, Angelo, tell me about the risk to the road ahead that you see as it relates to Broadcom.
Yeah, there's always going to be risks here. I'd say really you've seen kind of a really strong move here, not only from Broadcom, but also from NVIDIA and the other AI semis, as well as the broader semi space. And I'd say right now, at least kind of over the next 2 to 3 months, the biggest risk is we might potentially be getting a little bit ahead of ourselves. There's a lot of confidence kind of being thrown into these names. And what I would say is Q2 earnings season looks pretty good. But we're going to get a 232 semiconductor investigation, which probably doesn't look like it's baked in here at the moment. There's really no fear tied to that or concern tied to this 232 semiconductor investigation. We just saw an outcome in terms of copper, which was actually stronger than higher than we expected in terms of the tariffs being implemented on that side. So our base case was a 25% tariff. The risk is probably to the upside on that side. So that is a potential risk for the broader semiconductor industry and something that could act as a negative catalyst here over the next couple of months, just given some of the euphoria we're seeing right now.
All right. Always great to hear from you, Angelo. That's Angelo Zeno, Senior Equity Analyst.